Hello, good morning to all. Welcome to today's daily dose of market insights by OANDA. Glad that I'm back from my short vacation, given that we start to see pretty much interesting price action across the global markets last week. So today will be Monday, a brand new week, 20th of November. Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we start our daily dose of market insights, let's have a kind of quick recap of what happened last week. All right, so last week what we could see over here is that we start to see a herding behavior, especially in terms of the risk on herding behavior. Why? Because we start to see a slowdown in US inflation as dictated by the latest October CPI figure that was released on last Tuesday, and also as well as geopolitical tension between US and China seems to be turning around the corner after that so-called lukewarm meet-up between President Xi and US President Biden during the sidelines of OPEC meeting last week as well. And all in all, we start to see a slowdown, or still not slowdown, I would say a tick down in US 10-year Treasury yield. So that actually imply potentially a slowdown in global cost of funding, given the fact that US 10-year Treasury yield is the risk-free benchmark for longer term we call it interest rates, all right, that corporates that's bank charge to corporate as a reference. Okay, then with that we also start to see a dollar sell off. So before I took on my break last week, I do actually highlight in the short-term technical outlook that there was actually signs of a potential bearish reversal in dollar strength, especially you look at the dollar yen at this 151.95 major resistance level, where the dollar yen actually reacted off that level on Monday. So later we take a look at the short-term technical chart on the major dollar pairs. We're able to decipher what is the potential short-term technical trend going forward. And with the dollar strength abating, we also interesting start to see gold itself. So gold in the last in the late about in the month of late October, it started to do that pullback, and very interestingly, it actually reverse from its key 200-day moving average. I think it's a support at 1932, which I also highlighted last week. So gold itself, potentially we start to see the start of a potential short to medium term uptrend phase again. And going forward, what we see over here in oil price. So oil price, WTI crude oil price, which is the West Texas oil, as we name our platform, potentially yes, we talk about since September high all the way up to last Friday low, it actually declined by close to negative 23%. So that actually classified as a bear market in definition. But however, last Friday price action was pretty much positive, given the fact that there was a positive news flow coming out from OPEC Plus. So that I'll highlight to you earlier what this positive news flow is about. But most importantly, the price actually reacted off a key medium-term support for WTI crude oil price. So potentially for WTI crude oil price, yes, despite the fact that we start to see a negative 23% decline from its September high all the way up to last Friday low, but you know that price action actually could potentially change given such volatile movement, and OPEC also prices of oil is being more or less being controlled by the there's actually a much more significant factor that's being controlled by the cartel supply cuts, and potentially we could start to see OPEC plus meeting that's coming up this coming Sunday, which is the 26th of November. Potentially there could actually be we call it a further extension of this ongoing supply cut. But most importantly, we got from a technical driven perspective, we got to see how the price react accordingly ahead of this important news flow. And from there, we take things one step at a time. So with that, right, what are other key events to look out for today, and as well as what are the events that's really happened while we are speaking? And for that, we will actually round up with the short-term technical analysis outlook as usual. So now, what are the events that took shape earlier today is at this loan prime rate. So China itself, okay, as you can see my data over here, China refuses to actually cut their benchmark interest rate, which is the 1-year loan prime rate and the 5-year loan prime rate. So these two loan prime rate are actually benchmark for retailers, corporates, as well as housing loan, especially the 5-year. So 3.45%, 4.2% maintain status quo as the previous month. So this actually despite the fact that we start to see still sluggishness in the China property market. So it gives us a very clear signal that the China top policymakers, they are still taking things one step at a time. That means, i.e., they still do not want to be flooding the market with ample liquidity like what they did in 2015, 2009 during the Great Financial Crisis. This to prevent what I call further speculative, unproductive investment into the property market, which actually due to the previous two episodes of what I call rampant liquidity pumping that causes this situation right now in the dire straight situation right now in China property market. So I believe that the China top policymakers do not want to maintain or continue the similar mistake again. So, but nevertheless, that means, i.e., in terms of risk asset in China right now is primarily now pretty much dictated by external factors. That means what we're going to see, what will Fed do in the near future that could drive risk assets. So if Fed continue on the path of what I call potentially maintaining interest rate at this level rather than continue to hike much further, we could start to see a trigger down, a positive impact on China risk asset. Why? Because of the dollar. The situation now boils down to the dollar. That means as long as dollar weakness continues to be persistent in the near and short future, in the near term and as well as the medium term, potentially it could actually spill over to a positive feedback loop into the China risk assets. That means China equities, like the related like the Hang Seng as well as the A50. So that is for now. For that is the what you call it, the the channeling impact of this situation that's taking shape from a fundamental perspective. So now, what are the key things to look out for during the European session? Pretty much quiet for today. Session. We have a ECB officials that's speaking at 1 p.m. Singapore time later. And I want to highlight what's interesting over here is given the fact that after that softer US CPI data that was released on last Tuesday, now the Fed Fund futures pricing. So those who actually followed my daily dose of market insight, I will tend to actually look at this very interesting free tool that's available on the internet called CME Fed Watch tool to have a gauge on market expectation based on the Fed Fund futures pricing on Federal Reserve. We call it hiking or cutting interest rate cycle. So if you recall that in the last 3 weeks or 4 weeks, there's actually a small chance of a potential 25 basis point hike. So that is likely, very likely, the terminal hike. That means the last potential rate hike before the Federal Reserve starts to temper off its interest rate hike cycle for 2024. So that is why is it the last rate hike? Because that's based on the last dot plot in the previous meeting in September. So if you look at it over here, is that terminal interest rate hike has more or less been disappeared, 0%. So market is not now pricing in any interest rate hike further for the December meeting. So they're expecting the terminal rate to be at 5.25 and 5.5%. And what's interesting over here is that if I will look at the accumulated probability across the next few meetings after the December meeting in 13th of December, there is actually right now, because right now the Fed fund rate is at 5.25%, 5.5%. So if you going forward down the curve, the future calendar, the future FOMC meeting in 2024, there's actually market is now pricing 0% hike in June, in January, all the way down towards the end of 2024. That means what market is expecting is that there will be no chances of any hike going forward. So that's pretty much of an optimistic pricing by the interest rate futures. And what we could see over here is right now, as soon as March next year, there's actually a 30% chance of the first rate cut to come in as early as March, 30% chance of a 25 basis point cut. And the biggest probability comes similar in no change as in 3 to 4 weeks ago, that is May and June next year. So because of this dovish expectation by market participants, and as well as the seasonality factor of a center rally that tends to happen during the month of November all the way to January next year, that is actually driving this short-term bullish risk on we call it risk on behavior in global equities, especially in growth oriented stocks like the tech stocks, which is the Nasdaq 100 in US. So with that, that is the key highlight of the highlight for you all. So let's now join key fundamental highlight and news flow highlight to you all. And before we jump into the short-term technical chart, I want to highlight one particular news flow that actually occurred on last, in fact, last 18th of November, so it's over the not too long ago. It means on the weekend. So what we could see over here is that there's actually this particular news flow over here reported by Reuters, and he actually expect Saudi Arabia to extend its voluntary cut. So that actually causes the oil price to actually, the WTI crude oil price to bounce off a key support level, technical support level. So if this support level going to hold, potentially we could start to see at least some kind of short-term positive outlook in oil price heading forward into this end of this week. That means it will be on November 26th, which is on a Sunday. Okay, so later I'll cover more details on the short-term technical outlook on the oil price. All right. So with that, let me hide myself first, so that you guys can focus more on the screen, on the chart that I would like to share with you all. So now let's start with the FX market first. All right. So over at the FX market over here. Okay, so what we could see over here, this is the dollar index, which I tend to look at as a broad-based indication of the dollar strength. But don't forget, dollar index, the biggest weightage is in the euro dollar. So what we could see is that the dollar index over here, since the high of 4th of October and 2nd of November, early of this month, refuses to break above this range, upper limit of this sideways range resistance, and eventually in the last 3 to 4 weeks, going to collapse and break below the 50-day moving average, and right now testing the 200-day moving average. So all in all, what it means that for sure, this medium-term uptrend that has taken shape since the start of mid-July this year has been damaged, and potentially dollar index could actually now transverse into a short to medium-term downtrend. But for sure, if we start to break below the 200-day moving average, which is confluencing with this intermediate support at 103.30, then that could actually reinforce that medium-term downtrend scenario for dollar index. That means, i.e., medium-term dollar weakness. All right. And so if you look at the yield spread between the US Treasury 2-year versus the rest of the world, taking into account of a average of the German, UK, Japan, Canada, Swiss, AU, and China, we call it equivalent sovereign bond 2-year spread. So the US 10-year 2-year spread against the rest of the world has starts to narrow down, holding below a key resistance at 2.34%. So that also kind of give a bit of what you call it a reinforcement of this potential medium-term dollar weakness creeping back into the FX market. Okay, so with that, let's start with the euro dollar first. So euro dollar, before I went on leave, we were actually neutral due to actually mixed element. So it actually broke above the upper limit and broke above the 200-day moving average decisively last week. So for sure now we start to see a very clear short-term uptrend that is taking place on the euro dollar since the start of the 2nd of November, which is this month. So with that, I'll be using 1.0825 as my key short-term pivotal support level, which was last Friday's swing low area, very close to the 200-day moving average as well, to attempt to actually look for a further potential push up on the euro dollar, heading towards the next resistance at 1.095/1.099, which is the upper limit of this short-term ascending channel, and as well as the 61.8% PBoC retracement of that previous down move from the high of 18th of July all the way down to the 3rd of October, and as well confluencing with this a minor congestion area of 14th of August and 31st of August this year. Okay, so flipping to a bullish bias, short-term bullish bias on the euro dollar. So if as long as 1.0825 key short-term pivotal support holds. But however, if we start to see a breakdown with an hourly close below 1.0825, then we will start to see a much more deeper pullback back towards the lower limit of this short-term ascending channel at 1.075 / 1.0720 on the euro dollar. Okay, so now moving on, next will be the sterling pound, which is the sterling dollar. So sterling dollar, last week before I went on leave, we were expecting a little bit of push down close to the 20-day moving average, which indeed it came with expectation. Then thereafter, it shaped a strong push up and clear above the 200-day moving average as well. So that is pretty much came in line with the broad-based dollar weakness. So I will use last Friday's swing low area, very similar to the one I did on the euro dollar, 1.2375 short-term pivotal support on the sterling dollar. Looking for any potential dips to flip into a bullish, short-term bullish bias, heading towards 1.2510. Above it, potentially could see the next intermediate resistance coming in at 1.2540, which is also confluence with the upper limit of this ongoing short-term ascending channel that is in place since 1st of November low. So what is this two level other than the ascending channel? 1.2550 is actually confluence with the 50% retracement of this previous down move from 14th of July all the way to 4th of October, and as well as this minor congestion area over here from 14th of August to 31st of August. From this area here, 29th of August and 6th of September, which is confluence with the 1.2550 level. Okay, but however, if we start to see an hourly close below 1.2375, then potentially we will start to see a bit of what I call minor pullback first before the next potential bullish force exert itself, heading to test the 50-day moving average, acting as a support level now at 1.23 figure level. We also confluence with the lower limit of this short-term ascending channel that is in place since 1st of November, and the former minor swing high area of 9th of November and 14th of November turns into a pullback support also at 1.23 figure level. All right, so flipping to a bullish bias for the sterling dollar in short term. Okay, now what next for the Aussie dollar? So if you recall the Aussie dollar, we were actually bullish about 2 weeks ago before I went on leave due to the positive element. Recap, why is it bullish? Because it actually broke out of this descending wedge breakout on the daily chart, and this is where the price actually reacted of it on last Friday, before the 2 weeks Friday before I went on leave. Okay, a very clear a bullish reversal, and also the daily RSI also going to inch upward higher above the 50% level, 50 level, indicating to us that potentially right now we may start to see the start of a medium-term uptrend of the Aussie dollar, at least in first step to retest this major descending trend line. So that's more of a multi-week perspective, 68.15/69 figure level, reinforced by a bullish breakout of by a break above of the 65.95 on the 200-day moving average. So what will be the short-term technical level to watch? That means the short-term technical strategy for today. Okay, so so for short-term technical strategy, instead of looking at the daily chart, we'll be looking more on the hourly chart to give us a bit of guidance. Okay, so on the hourly chart over here, we are only looking forward for a potential push up, at least to test in first step the 200-day moving average first, which is at 65.95. Also now confluencing with the upper limit of this short-term ascending channel that is in place since 26th of October 2023 low over here. So I don't want to be tied so tightly at the 68.87 level, which was last Friday's swing low. I will give a bit of breathing space at 64.40. So 64.40, which will be my key short-term pivotal support. Look for any potential bullish dips to remain we call it to remain that short-term bullish bias, heading towards this 65.95 key intermediate resistance in the first step, which will confluence with the 200-day moving average, and as well as this congestion area over here of 29th of June and 11th August this year. But however, if we start to see a breakdown and hourly close below 64.40, then potentially we may start to see extension of a minor pullback scenario towards 63.90 again, which is the 50-day moving average, a retest of the 50-day moving average, and a test of that minor ascending channel support level before the next potential bullish leg up move unfolds. All right, so this level will be a key short-term pivotal support level to watch to maintain the momentum of this we call it short-term bullish uplift that has kickstarted on last Friday. All right, so now dollar yen. So dollar yen, if you recall over here, is that we did mention that there will be a last potential push up towards 51.95. So what's 51.95 is actually the major resistance where it was actually that major resistance or the major swing high of 21st of October, where the Ministry of Finance of Japan Ministry of Finance instructed BOJ to actually start to actually intervene in the FX market by selling dollar and buying yen. So it indeed on last Monday itself, it printed a high of 51.91, give or take 4 pips away from 51.95 before it started to reverse downwards, and clearly now breaking below the 20-day moving average. All right, so this was driven the fact by not by the MOF intervention or MOF instructing the BOJ to intervene, but it's more on the dollar side of the story, where the 2-year treasury yield and the 10-year treasury starts to inch down lower due to the market expectation that it start to price in a 0% chance of that terminal that potential terminal 25% rate hike, 25 basis point rate hike in the upcoming FOMC meeting. All right, so that is actually looking towards a very dovish expectation on the US central bank, which is the Fed. So that actually helping the yen to actually strengthen against the dollar. Okay, so in short term, right, what we're going to do for today is we'll be flipping to a short-term bearish bias, holding very closely below this 150.25. So 150.25 will be my key short-term pivotal resistance level. This level is also confluence with the 20-day moving average acting as a resistance, and as well as this previously minor trendline support level now turns into a pullback resistance, previously linking the lows of 11th of September. All right, so now looking for the price action to actually retest 1480.90, a break below it potentially could expose the next support level at 148.25. So what's 148.25 is in fact the swing low area of 5th of October and as well as 10th of October this year. Okay, so that's the strategy for today. But however, if we start to see a breakout when the hourly close above 150.25, then potentially we will start to see another round of we call it a very churning movement upwards to see a push up back to retest 150.75 level, which was last Friday's swing high, and above it potentially could see another round of test close to 151.50/151.95 major resistance level again. So that's the outlook for the dollar yen, flipping to a bearish bias below 150.25 key short-term pivotal resistance. Okay, now moving on to the stock indices. So for the stock indices, we start to see a bullish risk-on behavior across the board. So previously, before I went on leave, for the Hang Seng Index, we are looking for a kind of a push down very close towards this area over here, okay, which is the 1698 level. Okay, then thereafter the price actually bounces off before last Thursday actually did a what I call a nasty pullback again. This is due to the negative news flow up from Alibaba. So given the fact that Alibaba itself, the earnings expectation came in below expectation, and also there was actually that potential spin-off from a cloud unit, the IPO spin-off from a cloud unit was actually put on the back burner again. All right, but however, all in all, right, what you see on the price action managed to bounce from the 20-day moving average and didn't break below this minor ascending trend line support that is that I draw from the low of 24th of October, and also the hourly RSI has now started to inch upwards above the 50 level mark and start to shape a series of higher low as well. Okay, so telling to us, indicating to us that short-term momentum seems to be coming back into the Hong Kong 33 index that we coin our platform. So I don't want to tie it so tightly on last Friday's swing low, so I will give a bit of breathing space using 17,300 instead as a key short-term pivotal support level. So that actually also confluence with this minor ascending trend line that is now acting as a support level at 17,300 as well, and looking for a potential push up again to retest this key we call it a medium-term swing high area at 18,350 that is acting as a resistance since 15th of September this year. Okay, but however, if we start to see an hourly close below 17,300, then this short-term bullish outlook will be invalidated to see a squeeze down to retest the key we call it a medium-term pivotal support at 16,980/16,800 on the Hong Kong 33 index. Okay, German 30 also pretty much bullish as well, breaking above the 200-day moving average on last Wednesday, and also on at the start of last Monday, it also clear above this medium-term descending channel that is in place since 31st of July. So all in all, right, price action has now flipped to a very positive tone, but given the fact that we start to see a very sharp push up in price action, so the first resistance level to watch will be at 16,050 level. So potentially we could start to see a bit of more residual push up at 16,050, holding above this levels 15,760 level as my key short-term pivotal support for today. But however, if we start to see a breakup above 16,050 level, then potentially we could start to see we could start to see much more potential push up towards 16,240. Okay, so that is the outlook for the German 30 index. So if we start to see an hourly close below 15,760, then potentially this very steep up move could lead to a much more extensive extension of a minor pullback to retest the 200-day moving average, as well as this graphical support zone, minor support zone over here at 15,620/15,560. All right, so flipping to a bullish bias for the German 30 index for today. Okay, now what's next for the US indices? So let's start with the Wall Street 30 first. So the Wall Street 30 after last Tuesday push up, price action start to trade sideways, but no clear signs of a what you call it, a bearish bullish exhaustion. As you see, the RSI continue to actually hover above this ascending trend. We call it a parallel ascending trend line support that I draw, and also going to trade within this minor ascending channel, with the channel support now acting as confluencing with a with last Friday's swing low area at 30, not last Friday, last Friday's swing low area at 34,790. So I'll be using 34,790 as my key short-term pivotal support level for today, flipping to a bullish bias, looking for it to at least retest test the next intermediate resistance level at 35,295. So what's 35,295 is in fact this congestion zone over here at 12th of August and 14th of August, and also conversing with the 0.764 FIBO extension level as well, from the low of 28th of October, linking to the high of 8th of November, projected from the swing low of 10th of November. But however, if we start to see a hourly close below 34,790, then this short-term push-up scenario will be invalidated to see the start of a minor corrective pullback to retest this graphical support zone area here, which is 34,385, 34,190. So this is area is pretty key as well. Why? Because it's the pullback support of this former upper limit of this former descending channel that's linking from the high of 1st October that was taken out on last Tuesday, after that we call it weaker than expected CPI number now turns into a graphical pullback support area. okay, at 34,385 / 34,190. Okay, now what's next for the Nasdaq 100? Okay, so Nasdaq 100 will be flipping to a bullish bias. So yes, even though price action right now may do a bit of pullback over here, given the fact that the RSI now has started to actually inch below the 50 level, hasn't hit yet the oversold mark as well. So if you look at the RSI, it's slightly different from the RSI of the Dow Jones Industrial Average, as right now this RSI now is attempting to actually break below this parallel ascending trend line support that I dropped. All right, breaking below it. So all in all, it could be start to see a bit of minor pullback first before which is actually corresponding to its reversion towards the oversold zone for the hourly RSI. So key support level to watch will be at 15,540 for that pullback level. So any pullback potentially, if we manage to hold at close to the 15,540 level, then potentially we could see another round of short-term uplift to retest the next resistance level, intermediate resistance level at 16,160, which confluence with this 0.764 PBoC extension from the low of 27th of October to the minor high of 9th of November, projected to 10th of November minor swing low, and so correspond to the upper limit of this minor ascending channel resistance as well at 16,160. All right. But however, if we start to see an hourly close below 15,540, then potentially we could see a further extension of this minor corrective pullback to test the lower limit of this ascending channel, and as well as this graphical support zone over here at 15,265 / 15,160. We saw confluence with the 20 and the 50-day moving average coming to act as a support level as well. Right. So all in all, potentially we are now flipping to a bullish bias on the Nasdaq 100 and as well as the US Wall Street 30 index. Okay, commodity market. So let's start with gold first. So for gold price over here, so what we could see for gold, let me put it in gold. Yeah, spot gold. So spot gold, previously we had been looking for that pullback. So that pullback actually hit right at the 200-day moving average slash 1932 / 1920 before it did a sharp reversal upwards. So what we could see over here is that in short term, price action since the low of the retest of the 200-day moving average has started to trade in a series of higher high and higher low. So this is the hourly chart. So if you could draw a minor ascending trend line channel is now evolving within this channel over here, with the top of the channel coming in at 2006 level, also confluence with the minor swing high area of 28th of October and 31st of October, where it kickstarted this pullback. All right, so for sure in short term, our intermediate resistance will to look at will be 2006 using last Friday's swing low area at 1972 as my key short-term pivotal support level, flipping to a bullish bias for spot gold XAU / USD for today, as long as 1972 key short-term pivotal support holds. Resistance level to watch 2006 in first step. But however, if we start to see a breakdown and hourly close below 1972, then this short-term bullish bias will be invalidated to see another round of choppy corrective down move in first step to retest last Wednesday's swing low at 1957. So that's for spot gold XAU / USD. So flipping to a short-term bullish bias for today. Okay, now lastly will be the WTI crude oil price. So WTI crude oil price, let me highlight to you on the daily charts first for this Western Texas oil, which is we take into account of the this Western Texas oil price we name out in our platform. So it's actually taking into account the price action of the WTI crude oil futures. Yes, so even though we start to see a decline of 23% from the high of September all the way to last Friday low, but if you look at last Friday price action is pretty positive, and also where it bounces off a key graphical support area, which is the minor medium-term ascending support level linking the lows of 22nd of March all the way up to the 5th of May and as well as 28th of June, and as well as the swing high area, former swing high area of 7th of June and 21st of July. And if you could do the PBoC retracement, taking the lows of 4th of May towards the high of September high, it actually confluence close to the 76.4 PBoC retracement. So there's a lot of what I call a clustering of key support level, clustering of elements that actually confluencing with a single support level around at 72.40, and given the fact that the RSI also managed to bounce off very closely to the oversold level, and this bounce off actually reacted to this similar bounce off area on 3rd of May, where after that bounce off in the RSI, that lead to this medium term uptrend on WTI, we call it West Texas Oil, uh, West Texas Oil instrument, as being we call it name in our platform. So all in all, what we could see over here is this could be the start of a potential medium term bullish reversal in WTI oil price as we look ahead, as market, we call it participants, look ahead for this November 26 OPEC Plus meeting, which is this Sunday. So what will be the short-term technical outlook? Okay, because that's more of a longer-term picture. So the shorter-term technical outlook, in first step, we'll be much more concerned with the swing high area of last Tuesday, which is around 78.80, 78.90 level, and the 200-day moving average that has yet to be taken out on the upside. So for sure, in short term over here, if you look at the short term, RSI has been in oversold region. So in oversold region, but it hasn't shaped that bearish divergence, only oversold. So indicating to us that yes, we may start to see a pullback, but rather than a clear bullish reversal of this minor up move that has taken shape on last Friday swing low. So I'll be using this level over here, this minor congestion area over here, as my key short-term pivotal support for today for any pullbacks. So this level, if I do a PBoC retracement, is actually from last Friday low to the current Asia session intraday high, is close to the 61.8 PBoC retracement as well, which is 74.30. So using 74.30 as my key short-term pivotal support level, looking for at least a push up to retest 78.10, which is the 200-day moving average, then slash 81.05. If 78.10 is being taken out, which is this minor congestion zone over here, and means former swing low area of 4th of November broken down, now turns into a resistance, and as well as the 20-day moving average acting as a resistance, as well as around the 81.05 level. But however, if an hourly close below 74.30, then potentially we could see another retest of last Friday swing high, last Friday swing low at 72.70/72.40 on West Texas Oil. So flipping to a bullish bias on West Texas Oil, as long as any minor pullback managed to hold right slightly above the 74.30 key short-term pivotal support that we have for today for West Texas Oil. So with that, that could actually potentially sum up for today's daily dose of market insight that I share with you all. And also one more key event to look out for earlier tomorrow morning will be the release of this RBA minutes, okay, for the previous meeting where they actually hike their benchmark interest rate. Okay, so something to look out for. If it starts to pampered with more hawkish comments, potentially that could actually reinforce further Aussie strength as well. So that report will come out at 8:30 a.m. Singapore time tomorrow. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.